And the same fella who did the last article for Zero Hedge, Adam DeLuce, via goldtelegraph.com, has another article for Zero Hedge that was posted after the Canadian one. You're going to love this one. America, paralyzed by mounting debts. Of course, again, housing prices crashing. You could only wish that happens as your crypto portfolio does this. You might be able to pay off your house and go buy some other properties. Now you've got some residual, and you can get fire sales. The people who didn't want to listen, we didn't think about cryptos, you guys are conspiracy theorists, or, blah, blah, blah. All right, we'll be buying your house. You'll be the one walking away. The bank will take it. You won't even fight for it. You'll walk away like a sheep. You won't do what Jay Snip did and fight for it. And believe me, OJ Snip got his, okay? And we'll come snatch that house up from the bank at a fire sale price while you go to Facebook and complain and don't want to listen to any of us tell you how to fix these problems and get out of debt and some little tricks and think, nope. Anyways, let's get on with it. In case anyone is still unaware, government debt is out of control. It's doubled under President Obama, and it is anticipated to increase for 50% at least in the next 10 years. It's not just the repayment of debt that presents a potential crisis. It's the interest payments. With a clear correlation between government debt and diminished growth, a natural first step would be for the government to ease its deficit spending on programs such as Medicaid, Social Security, and Medicare to decrease the waste inherent in some of those programs. Interest rates are expected to rise $1 trillion during the next decade. That is more than the U.S. spends each year on Medicaid and its military combined. It will cost $55,000 per household over the next 10 years just to service the debt, not pay it down. Just make the payments. In addition to lower debt, the government needs to find new sources of revenue. Oh, stand by. Phone call. All right, so I'm back. It was a nonsense call. That's what that was. In addition to lower debt, the government needs to find new sources of revenue by eliminating spending loopholes and overall spending. Social Security and Medicaid will run out of funds, and these programs need to be restructured and managed more efficiently to ensure that they are available to future generations. Thanks to central banks pegging interest rates close to zero for nearly a decade, American households are heavily in debt due to access to, again, cheap credit. The government's increasingly high debts will leave an unsupportable burden for upcoming generations. If economic growth continues to decrease, there will be less income and less tax revenue for the government to pay its debts. It is anticipated that the federal debt will grow by more than $13 trillion by the year 2030. Even if interest payments are made, there will be less funds available for security, infrastructure, and education. The once great country of America appears to be on the decline, paralyzed by mounting debts it cannot handle. And in case you're not a fan of history, each great empire that has collapsed before ours pretty much collapsed for the same reason. It always, always, always revolves around debt, not being able to pay it. One of the biggest, events in history, the Roman Empire, when it could not pay its debts, they had to water down the money, coin clipping and all this other stuff, adding different metals to coins, and that was the writing on the wall. We can't afford this, so let's go start wars, and we'll expand, and we'll take those treasures and pay our debts, and they couldn't do it anyways. They just got more debts. Next thing you know, there's no more Roman Empire. And that's one story. I like that one because there's a lot of history behind that we can go look up. But there's other instances of the same thing. It's usually, like always, related to debt every time. Inflation is the normal response to high government debt. That is because inflation actually devalues outstanding debt, allowing the government to repay in devalued dollars. To increase available funds, the U.S. Treasury sells government bonds. and foreign governments are the largest purchasers. As of January, foreign investors own $6.35 trillion in U.S. bonds, with China and Japan the largest investors with a total of $2 trillion. When the demand for Treasury bonds decreases, the Federal Reserve will need to increase interest rates, which increases the cost of borrowing. Even a slight decrease in bond purchases would have severe consequences on the value of U.S. Treasury bonds. The demand for Treasury bonds is still robust, at least we think, right? But the current debt spiral may lessen interest. The Federal Reserve was not the only central bank that has been selling government bonds and lowering interest rates to stimulate the economy. It's a tactic known as quantitative easing, wherein central banks act as investors instead of regulators. The Bank of Japan announced that its accumulated assets at the end of November were 521 trillion yen. Its policy of quantitative easing has kept Japan's interest rates near zero level and has even drifted into the lunacy of negative interest rates. Governor Kurudo has confirmed Japan's goal for 2% inflation by 2019. The admission that the artificial economic stimulus may be coming to an end has not been easy, and it has investors confused. The Bank of Japan has historically bought numerous assets from government bonds to real estate investment trusts. The Bank of Japan embraced quantitative easing in 2013. By 2016, its interest rate fell below zero to negative. At that time, or at the same time, I should say, it announced its plans to continue buying assets until inflation exceeds 2%. Its debt was 15 times the amount of its tax revenues. Did you catch that? Its debt was 15 times the amount of its tax revenues. Japan's policy has proven a huge failure. It has accumulated debts that comprise 253% of its GDP. Let that number sink in. 253% of its GDP. I'm sure that's sustainable. That'll just keep chugging, right along. Following the crash of 2008, the Bank of Japan followed the example of the U.S. and bailed out its major corporations and provided them with low interest rate loans. When that didn't work, lending institutions were consolidated, think of the U.S. bank mergers, and subsequently nationalized. Government-approved policies such as quantitative easing allowed the unprecedented rise of Japanese debt to the point where it may never be repaid. Assuming no changes in tax revenues, Japanese interest debt alone will exceed its tax revenues by 2041, the year. Quantitative easing has proven to be a failure on a global level. President Trump plans to institute massive tariffs on steel and aluminum imports, which has caused uneasiness within the financial community. There is a fear that exporting countries could retaliate by dumping its assets of U.S. treasuries. As noted above, it is foreign governments who own the majority of U.S. treasuries. The U.S. has become dependent on this foreign demand for its bonds. The tariff, on top of the recent tax cuts, comes at a bad time. It's not known whether President Trump will institute these tariffs or in other countries. And in other countries are advising caution and restraint. While U.S. consumers have been cheering the tax overhaul, the same could add $1.5 trillion to the country's debt. The U.S. and Japan are reaping the consequences of out-of-control spending and manipulative economic practices. Unless policies change, these debts will become insurmountable and major financial crises will be the consequence. I strongly agree with that because I wouldn't be doing this video if I didn't. And I've always asked this year after year after year. How does this end? It doesn't just go away. The trillions of dollars does not just go away. Oh, we're going to write that down to zero. No. Somebody owes that debt to somebody. Somebody, that's you, owes that debt to somebody else. It can't just be wiped away. What's Japan going to do? What are we going to do? What's Australia going to do? What's the entire Eurozone? They're talking about, they haven't even stopped. They've been buying back the bonds, $100 billion a month or some crap, like an enormous amount over there. This is a bailout for the corporations of the world. Because they don't bail out the entire stock market. They only bail out the top companies in the stock market. meaning the Fed or other government agencies on the other side of the pond, not the Fed, but whether it's the European Central Bank or whatever, they're buying up stocks of companies. Wouldn't it be nice if you and I could create a company, get publicly listed, not have to do really anything, and just know that someone's going to be out there constantly buying our stock, pushing the price up? I mean, that would be a pretty sweet deal, wouldn't it? And then we could say, well, if we don't do this, it's equal to, national security. It's a national security issue if we don't do this. Too big to fail. National security. Stock market, too big to fail. And the guys who caused the problem, too big to jail. So we just keep on going until you don't. And that's when you better have your precious metals and your cryptocurrencies. Don't forget about those precious metals. And by the way, you can still go to sdbullion.com/jsnip4, and there's a little promotional code there for you. sdbullion.com/jsnip4. When you get some of those crypto profits, you're going to want to buy some precious metals. Just FYI, don't forget those. Okay? Take care.